Of course, there are always several reasons why investors start talking about a certain stock or not talking about a certain stock. But in this video, I'll discuss the reasons why I think a lot of investors are starting to talk about Oracle stock, given the improved stock price performance and given the increasing business from artificial intelligence. There's been a lot more interest in Oracle stock. So let's take a look at some of the reasons why. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. At the end of the quarter, the company had nearly $10.7 billion in cash and marketable securities. So it's a strong balance sheet. And the short-term deferred revenue balance of $9.3 billion was up 4% year over year. And over the last 4 quarters, the operating cash flow of $18.7 billion was up 9%, and free cash flow of $11.8 billion was up 39%. Oracle is one of the most profitable companies in the world. It generates an operating profit margin of 47% in the latest quarter, and that's not too far behind the leading operating profit margin company in the world, which is Visa at 67%. So Oracle also signed several large deals in this quarter, and they have many more in the pipeline, as highlighted by Oracle's management. And the constraining factor is its ability to serve these customers. Customer demand exceeds supply. As management is saying here, we are working as quickly as we can to get cloud capacity built out, given the enormity of our backlog and pipeline. That's great to hear from an investor perspective when a company has so much demand for its product and service that it's working diligently to increase supply so that it can meet that demand that's already there, given the company's increasing remaining performance obligations, record contract signings, etc., etc. So management saying that throughout its fiscal year 2025, they expect continued strong cloud demand to push Oracle sales and RPO even higher and result in double-digit revenue growth this year. That's up from roughly 6% revenue growth in its previous fiscal year. They also expect that each successive quarter should grow faster than the previous quarter as OCI capacity increases to meet demand. So that's great news for fiscal year 2026, right? If demand is going like this in 2025, that means 2026 is going to start from a higher point and could increase from there. So great news for Oracle stock investors, to be sure. As the company increases its supply, it expects revenue to jump right alongside it because they already have the sales in place. All they have to do is actually deliver on that by having the capacity to deliver. And so it's no surprise that its capital expenditures in fiscal year 2025 will probably be double what it is in 2024, in fiscal year 2024. And that's what I've heard from all of these cloud providers, including Oracle, Amazon Web Services, Google Cloud, Microsoft, Azure. They've all indicated they are increasing their capital investment by the billions of dollars to meet this insatiable demand from the market to develop artificial intelligence capabilities, to train large language models, to operate large language models, to use their proprietary data to build specific proprietary large language models, to incorporate these models within their business. So demand for the market is exploding, and these companies are increasing their investment in the category to meet that demand. Now, one of the risks here is that there's overinvestment industry-wide to exceed that of what market demand rests. So right now, you're seeing all of this buildup, but there's a risk that all this buildup exceeds what the market is demanding. However, I don't think there's a big risk for that happening this year. I don't think in the calendar year 2024, there's going to be overinvestment. I don't think that's going to be the case in calendar 2025 either, because demand seems to be growing much more quickly than anticipated. So over the next 2 years, given what I've heard from several of these cloud providers and the increase in investment in building out capacity, I don't think there will be an overbuild. But perhaps starting in 2026 or 2027, if this trend of investment continues, I don't know if the demand will be there. Now, I am expecting a new use case from generative AI, something other than large language models that's going to create more demand for artificial intelligence. That's going to be that next leg of growth. And I think it's reasonable to expect that, given the leaps and bounds of the effectiveness of AI, that there will be other use cases, most notably in artificial intelligence for driverless car technology. That, I think, could be a very probable next leg higher over the next 2 to 4 years, because demand for the market is there. There's companies that would benefit significantly from that, including rideshare companies and food delivery companies that would save tremendous money by having driverless cars on the roads and could potentially boost profitability. So they would be interested in that. So I don't think the risks of overinvestment right now are very high. Management continues to say that they're committed to their fiscal year 2026 financial goals that they set out a few years ago. But surprisingly, these goals might prove to be too conservative given our momentum. So if anything, management is saying that these goals we highlighted for fiscal year 2026 might be stale now that our momentum is so strong that it might be too conservative. We might beat these financial goals very easily. We might beat the 2026 goals in 2025, given how strong our momentum is. And so as an investor, you can understand why people are talking about Oracle stock, because of the success that it's having, because of the rapid increase in demand. It's accelerating, and the company says it's accelerating at an accelerating rate. So investors are excited about companies like this that are growing, that have a strong tailwind behind them, lifting them higher because of that tailwind in artificial intelligence. And so many investors are becoming interested in Oracle stock. So who are the companies that are choosing Oracle Cloud Services and Oracle Data Centers? Well, NVIDIA, Microsoft, Google, xAI, OpenAI. So these are the biggest AI companies in the world. And it's because OCI trains large language models several times faster and at a fraction of the cost of other clouds. The operating system and the database are fully autonomous, which eliminates human error and eliminates human cost. So it delivers faster, less expensive, and more secure data for their customers. And so you can understand why these companies, the largest companies in the world, are choosing Oracle. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.